Good morning, good afternoon, everyone. My name is Russ, and as always, here the Data Dash update. Guys, today is Wednesday, and this week is actually super important from the macro perspective because, simply said, there has not been the single day where we do not have the red folder news. If you would like, I promise to cover some of the sectors that I didn't simply have time during the last 2 weeks, and with all that said, let's see what we can do. Today, of course, I would definitely love to cover everything which is related to the silver miners. For those to understand them well, we would cover the juniors versus silver itself, gold to silver ratio. We would cover gold, silver, palladium, platinum, and other plays that, in my opinion, are providing, honestly, the generational entries. Something I've been waiting for at least 5 years, but people in the space are telling me this is like a multi-decade opportunity. How does commodity stocks are underpriced vis-a-vis the tech stocks. Those are long-term contractive cycles. So if you missed my previous video about silver, I'm gonna attach it here. Please go watch the fundamentals. I'm not gonna have the time to cover all the fundamentals, why silver, how is it used, where is it industrially applicable, and so on. We're gonna cover, of course, something which is really of my concern. This is the TLT chart, or iShares 20-year treasury bonds. As you can see, the bonds here had quite a prolonged, intense rally. Those are 5% move just in a matter of a week. This is something that severely affects the markets, and we'll cover those too. Obviously, we're gonna touch upon Euro USD, DXY, because they affect everything. And I know there's a lot of people here who would say, oh, but that's just Forex. Yes, that's just the Forex, but Forex market is the multi-dozen trillion-dollar market that totally affects, of course, the risk assets like Bitcoin. And of course, we're gonna also speak about some of those very important things, such as volatility index. I'm gonna give you my view also on a couple of stocks that I think might be finding the bottom soon. And with all that said, let's go. So first of all, before we start, I'd like to go into the red folder calendar on seeing what is there to be expected. On Monday, we had manufacturing PMI. It came pretty much in line with expectation, not a big news. Joel's job opening on Tuesday came in lower, much lower than expected, 300,000 less jobs. And for the market, it's actually interesting because market thinks that economy is about to slow down itself. So market starts pricing in the higher probability for the rate cuts. And this is, of course, bullish for the risk on assets. So keep in mind here that bad is good. Bad is good in this case. So the fact that the US market is not overheated or not providing many new job opportunities is actually putting the prices up. But what's really important, of course, is the non-farm employment change that's going to come in an hour from now. And I still want to push the content a little bit faster, so we're not going to wait, for how the market and how the stock exchange would react. But I would provide update on those on Friday. Unemployment claims are also coming on Thursday, and then we have non-farm employment change and average hourly earnings on Friday. So it's like a very, very heavy week. I don't recall from the top of my mind a week where we had a red folder every day. And most important, of course, not those five things. The most important thing is what's going to happen on Wednesday, the June 12th. The CPI, core CPI, month over month, year over year. That will be the day we're definitely going to make the entire market move. And I really encourage you to take your phone, put in your calendar, Wednesday, June. It's going to be 1 hour prior to New York Stock Exchange open. So roughly around 8:30 a.m. Eastern or around 1:30 p.m. the UK time, GMT. So that's something that for sure going to provide a move to the markets. And there are a couple of scenarios what's going to happen here. And I honestly think that market might already give us a hint of what's going to happen, because if you would see those TLT move of more than 4% in a matter of a week, that's quite a significant move for the market that represents $50+ trillion, the bond market in the US itself. Please keep in mind what the TLT is. TLT is the bond price, so it is actually inversely related to the 20-year yields. And looking at yields, if you missed my previous videos, you might not know, because bond market is not as simple how that works. But actually here we are creating lower lows and we're creating lower highs on the interest rate itself. So to put it simply, market kind of understands that the return that investors might have with those 20-year bonds is not as profitable. Like 4.5% is much lower than 5%. And so people would be interested to actually beat the inflation and hold their asset elsewhere. And elsewhere in this case means equities. So the drop in yields or the spike in TLT can actually indicate that there is a certain momentum, the bullish momentum in the market. So TLT is moving, and after the ISIN price number that came yesterday, I pointed out that the fundamentals of TLT look much better. Moreover, keep in mind that we have a quantitative tightening soon coming down, which adds to the Federal Reserve buying. And today TLT broke short term and also top side of 200-day moving average. So I think breaking short term top side, it already gives a nice run, because a lot of investors who trade moving averages, they would see those breakout, they would see those high that has been created. So it purely, even below, even beyond any quantitative tightening, is just a technical move that can sustain itself. But on top of that, if on the 12th of June, the CPI is low, I'm going to change my rating. I'm going to change my perception of TLT to very bullish, and I would add those into my position, because TLT allows you to not just collect roughly, let's say 4% a year yield, it allows you to benefit from the price adjustments of those bonds. So if, for example, I have a large portfolio and I want to buy those bonds, those treasury notes early enough, expecting the yields to actually go down and Federal Reserve starting to cut, I might have a generational entry opportunity here, or at least for the next few years. And in this case, the TLT has bottomed, right? So that's one of the scenarios that I would expect. So I already have around 200,000 position on TLT, and I would consider adding more to that, because this is, let's say, safe bet. And more importantly, as I said, what helps understand the TLT is that yields, the underlying yields, they really drive the market, and stock prices are based on the DCF models, or discounted cash flow, which depend on the discount rate, and those discount rates are actually depending on yields. So if you have a company which has, for example, 20 years of growth ahead, you take their revenues from the year number 20 and you discount them from all those years to the present value of today. So imagine how much it would affect the evaluation of the companies if they're discounted with 4.5% or with 4%. We're talking here about hundreds of millions of dollars that gonna be added as a perceived value into the markets, right? And of this case, of course, the stocks, the evaluation of those companies would be considered not overheated. They would consider on par or even below what the market is willing to pay. So if inflation number on June the 12th is coming down and hopefully economy holds, meaning no wage price spiral, no crazy moves in employment data, and yeah, so the market is not afraid that, you know, we're gonna end up with this never-ending spiral of this macroeconomical KPIs, that everything gonna stay pretty much as is, then it will be very bullish for the rates, and more importantly, that's why I'm having those long run, it's going to be very good for stocks, and it's going to be very good for Bitcoin. So CPI June 12th, let's see. Now let's see what the foreign markets are indicating for our next move. First of all, a very simple one. Australian dollar versus Japanese yen. Everyone gets so short Japanese yen. It's like overextended trade. I understand that Japan, due to their central bank policy, is absolutely not doing well, but it has been such a prolonged rally. If I'm gonna look here on a daily, guys, you understand, you know, nothing goes on in a straight line. If you have like more than 10% move in a couple of months, which is a lot for the Forex market, then here I start seeing the market structure break. So it was harder and harder to print the higher high for Australian dollar until we did not start creating lower lows. So here direction is clear, and I remind you, Australian dollar indicates risk and Japanese yen indicates safety. So market is looking for more safety. That can also be reflected in the Euro USD chart. Euro USD is also having the hard times to break through those resistance line. I think this we can consider as the deviation or the swipe of the range, or the stop losses of the people who have been shorting are being capitulated. Basically, the swipe of those stop losses allows market maker to move the price down without having so many market participants on the other side of the trade, because as I've been always saying, for someone to buy, someone needs to sell. So if the price is expected to go down, market maker doesn't want the people to actually be in the short position, because market maker have to be long, right? I hope that's clear by now. I would not repeat it in every video, but if you see those swipes that are getting rejected and accepting in the previous range, no need to consider them as the higher high. They are not the higher highs. They are SFPs, the swing failure pattern. I'll write it down. You can Google and read more about it. So I think we have the SFP here, and the case that we still are within the previous range gives me a possibility for the range low to be retested. And what does it mean for DXY? DXY, which is a dollar strength index, can actually print this W formation here. Once again, those formations are working relatively well when we speak about the Forex market, just simply because all the currencies are worthless and they're like basically trading so much related to the underlying technical analysis, because there is no fundamental, there is no balance sheet, there is no net income, there is nothing that, you know, someone like Warren Buffett can go and study for those currencies. So they are actually respecting the meme lines, right? So they're trading in all these downward channels and so on and so forth. And what I'm seeing right now, I am seeing more risk. I'm seeing more risk for DXY. If the DXY gonna come retest our key level of 105, please also be aware what would happen with the risk assets, you know. Of course, Dow, S&P 500, Nasdaq could easily correct 2, 3, 4, 5%, but taking into account that funding in crypto is getting overheated, they might have much higher liquidation weeks. But before we jump into anything risk on, let's please do something I promised since a while. So I think first of all, we need to start here with metals, and gold is, in my opinion, still looks quite bearish here in the short term. What I mean by bearish, I see a bunch of higher highs here being printed, and I see that momentum is starting to slow down because I see bearish divergences when it comes to RSI, when it comes to MACD or moving average convergence divergence indicator. So those are the signs for me, and then I can use various methods. I don't need to, you know, simply look on oscillators. I understand that here we might have like a little bounce, maybe a small bounce actually to just liquidate the late shorts. This might be a lot of people shorting here. So we can swipe all these highs, but in my opinion, this is from Elliott Wave perspective, wave A, wave B, and I think the wave C should give us the targets somewhere. Let's draw them down together in the charts. I think the minimum we would have on gold is actually 2,300, so not that far from here. Target number 1, but I don't think it would stop in there. Target number 2, 2280, and target number 3, let's say 2250. I expect the correction to go at least until those levels. But a very important point, as you will remember, I've been always mentioning those, some are capitulating by price, some are capitulating by time. So I actually expect also metals to not do that much here, especially if what I just mentioned 10 minutes ago, the narrative on the markets will be driven by the good economy with the potentiality of the Fed to cut. So it can actually give more breather to the stocks and equities rather than the commodity themselves. It does not mean that I am changing my stance. Timeline is the most important thing. I just think that gold and silver might chop a little bit more here. So also when it comes to silver, the first thing I'd like to chart is obviously the gold to silver ratio. And you can see here that we are pushing into our average true range. This red line here, it's often called ATR. ATR, you can Google as well and understand how it can be helpful for your trading. ATR is pretty much providing you the potential for the volatility. So obviously when we got like that overextended, also in RSI and a bunch of other oscillators, you start to see MACDs curling up. There is normal to have a bounce up. So I'm not so worried, actually, I'm way less worried for silver, and I'll show why. Because gold can correct, but I think the gold to silver path, as I said many times before, and I think there is not a single channel here on YouTube that indicated you that's fundamental wealth redistribution opportunity when it comes to gold money moving into silver. We're still gonna be at 48.50 within a matter of year or two from now, so there's no need to worry when I look on the silver chart. Of course, it does not look so great here, because for you it's going to look like, oh wow, the market structure has just shifted. We couldn't print a higher high, so we printed lower high, and now we're printing lower low. So So now we're gonna go down, right? I don't think so. I think the path for silver is following. In my opinion, whatever the gold does, silver is actually relatively close to finalizing its correction. The wave A, the wave B that provided this lower high bounce, and now we are closing soon on the wave C. And you know, from the Elliott waves perspective, obviously there are a number of alternative counts. Please, if someone is zealous and you know, extremely assertive about his account, those people are dangerous, and follow them, because it's the game of probabilities. And of course I can redraw this line, but it can be something like 1, 2, 3, 4 here, and 5. But 5, you know, it can also get as low as 28.5, and maybe that bounce was actually not significant. We can draw also something like that, you know. There was one more bounce here, and in this case we simply redefine our count. You know what I mean? So I'm not going to go so much into details into the Elliott wave theory, because it's going to take us dozens of hours. But I think, to summarize, the bottom for silver is either 28.5, 29, or it is already happening now. But as I said again, capitulation by time, and silver can slow down its volatile moves and actually consolidate a little bit here. So for those who want to ask me, okay, but doesn't mean I buy now, doesn't mean I buy later, does it sell like I sell now, I buy cheaper later? Like, first of all, I want to remind everyone, the miners are extremely underpriced, and for you to understand where we are, even if we take that horrible SILG ETF that I absolutely don't like, because it includes so many majors, and majors having a horrible history of diluting their shares, creating more shares out of thin air. All the companies like First Majestic, Pan American Silver, Hecla Mining, and so on. You can just put an indicator in the bottom of your trading view. I'm not going to do it right now because it's going to take so much time, but you would see that they're constantly creating extra shares, and that's why they're like artificially making all this financial engineering with their stock prices. So SILG unfortunately includes those $5 billion plus company. It's called Junior, but it's not really Junior. Let's not get like so much affected by the name of it. You know, it's like calling the product from the supermarket natural. Natural means nothing. It's absolutely, by no regulation it means anything. The same way there, you know, there's no, like, let's say a standard definition for what the junior is. For someone, junior company is anything below $10 billion. For someone, you know, anything which is like not as Apple size, they already call those juniors. So for someone, it's just the stock prices which are like in a penny stock territory below $1. So there's no strict definition. Please, that's why be mindful of what others call other terms are being used here. In any case, you see where we are right now on SILG versus silver. So we just starting to create our first potentially higher low, and I'm on a weekly time frame. So this is a good sign, you know, that we created this higher high, and maybe now we're gonna do something like that, trying to break out of that range of accumulation, and then the pathway would be like that. And by that I mean like 70, 80, 90, whatever your risk appetite is. So miners themselves are like actually still at a very bargain prices. Let's have a quick look on one. So for example, Silver X Mining, something that I indicated a long time ago, and we bought and then we added in April, so around those levels. And then we already had like a very nice run up of roughly 50%. And what we are trying to do right now, we're trying to actually retest from the upper value area high, those range where we've been consolidating since 2023 summer, right? I'm in a weekly time frame, so what one candle is 1 week. And of course, the next target would be those double top, which is already bringing us into the upper range, apologize, and another 60% from here. So my concerns here, and if you just really like gonna follow 50% moves in silver, and you're gonna dump it all here, trying to get something at, you know, 3 or 4 cents lower, what is the probability that we're gonna get back into those zone? I think it is quite low. I don't think that is actually happening. Maybe it's gonna happen. Maybe there is a sell-off. Maybe there is a escalation. China, Taiwan. You know, so many things can happen in those times. So, but you can't predict those. So, in my opinion, it isn't worth the micromanaging here. Also, because frankly speaking, there is no options. Like people were asking me just now in our Telegram group, shall I buy options or shall I buy stocks? I was like, guys, there is no options. There is no opportunity for market makers to affect the price during the triple witching, during the Friday expirations. There is no such a thing as max pain due to the option expiration. There is no many more dirty little secrets that market maker would play to actually make a certain benefit for their positions, right? So it is pure just long and short. Like you can short as well those stocks, but honestly with the maintenance margin, it doesn't worth it. It's like so much easier if you're a market maker, short something that requires you 20, maximum 25% of the collateral to keep the short open. Here you need 10x of the 1000%. I wanted to say 10x to actually hold your position. Like, do you want to lock up 10x your money to go like 3% down on short? Obviously it doesn't make sense, and this is why from my perspective there is an incredible opportunity we have here. Like honestly, I think this maybe like the last few years you can make life-changing money, because later on with the automation, AI, and enhanced market making, everything potentially would just trade a little bit like the prop firm trading are doing. Like when you're trading S&P or Nasdaq or Apple or Google, of course they do sometimes those nice swing moves of like 12%, but those like a macro related moves. We're also not going to have so much of volatility in my opinion in the next 10 years. Like here you really see how value is underpriced. I don't see any other asset class in the history right now where like we have such a huge reward potentiality with such a low risk. So please don't sleep on it. Even if you are 100% in crypto and you're not interested in anything, I'm telling you this is much better from the risk reward perspective where we are right now in the world, simply for a few reasons. Because whatever the scenario going to be, is it going to be the soft landing and economy gonna go really well from here, then we'll need more photovoltaic panels, electric vehicles, like every Tesla using 40-45 grams of silver. Where is it all going to come? It needs to come from miners. But if we are going into the stagflation or prolonged recession and increased money printing, then silver is also pegged to gold through the GSR, the gold to silver ratio. So of course, with governments like debasing their currencies and printing more money, those asset classes also going to benefit. So what is the probability in the world that is actually going lower? I don't think that silver would ever be seen lower than $24. That's already like a stretch for me. I think we're in the beginning of an amazing bull market. And please share this video with your friends. Like I shared personally, I have a few friends, successful entrepreneurs, made their exits, made 8-9 digit, sitting on cash. Very often entrepreneurs are not so good in money managing. They know how to generate cash, but then they don't know how corrupt our central bank governance policies, that there's just all evaporating somewhere. So yeah, I shared a few videos of mine with my friends, not because I'm like, like look what I'm talking about. No, it's honestly, it's like it's an opportunity for the families to strive in the next generation. And in my opinion, it's gonna be less and less of those. For the reason that I explained. But in any case, if we come back to the charts from here, I don't recommend you to short. I don't recommend you to be too greedy, trying to get 5% down. I think just wait a little bit if you want to add. Maybe silver is going to correct slightly more, and then I'm going on a monthly, and then we still see where we can be. We're going to be in the dollars territory. I'm not saying we're going to be like in $10 because that was also like a huge silver squeeze that we experienced back then, but we can easily be at 10 bagger or 5 bagger territory. So if you have like other better ways to 5x 10x your money, please let me know in the comment section down below, because I don't. Maybe something related to the penny stocks and uranium sector. Maybe, of course, something related to the new industries like psychedelics. But again, with those companies, the risk is so much higher because we are speaking of legal, we are speaking of approvals, we are speaking on the R&D pipeline, we are speaking of the government's onboarding or not onboarding, and a bunch of discussions that are taking place right now in the medical community. So in my opinion, it's like uncomparable. There is something that like everyone needs for every semiconductor to run, and there is something that in my opinion we definitely need. I'm a big proponent of psychedelic therapy, and I think more and more doctors need to onboard that. But we also like here fighting with the what kind of ministers of health. Like just Google Ministry of Health of Belgium and you will see what do you expect from that person from the approval perspective. That was a small joke from my side. Let me know in the comment section down below if you actually Googled the Ministry of Health of Belgium. No offense to my Belgian friends, but we understand where we are, basically. Yeah, that sums up quite well. I know you also want to know how far the Bitcoin is still up, and I was telling it's going down. I'm not worried much here, guys, to be honest. I see this crazy OI open interest spike of more than 2 billion here. I see that spot has been selling and CVD for perpetuals has been rising. Is this sustained move? I don't think so, because I also see a lot of liquidity that is residing here. So probably also quite concerned with the volume. Like the volume is absolutely not supporting this move. So I'm not encouraging you to rush into anything here, but what can happen if BTC closes above 71.8 or 72,000, then everything would run. And for those reasons, I also want to give you a trade. And my trade in this case would be an alt trade, because I still think we have a nice opportunity for a lot of alts to run. Let's see, for example, Engine. Engine coin is sitting very, very close to its range low. And my recommended trade for Engine would be something, the entry around 0.3 and the stop loss around just below, you know. Let's create with this long tool a nice trade here where I would have 0.28, you know, maybe like 4% even for Engine, and we can run all the way to potentially 48 cents, this previous high, or at least to the range high. So your TP1 can be 0.39, your TP2 can be 0.48, right? So in my opinion, it's worth a try because the risk reward is tremendously well here. It's, you know, whatever you define, but like 10 to 1 or 15 to 1. So those trades I like to take. You see how also stochastic has been curling down here, and as well the fact that we are like close to the range low, maybe give yourself a couple points to add, but still cut it early if the range is lost. Of course, if the range is lost, there's no point to sit on this trade, and you remember alts can bleed indefinitely. So with all that said, I think that we have a nice opportunity for trading when it comes to decentralized exchanges. And when it comes to the sponsor of today's video, which is D-Gate. D-Gate is the ZK-driven solution decentralized exchange where, in my opinion, you would want to make more trades, especially if it's a short-term trades, what comes to taking profits, taxes, re-entering. D-Gate has just significantly improved the interface. If I'm gonna look here on Ethereum, you see that they have nice volumes, so very, very low spreads. We're talking here about cents, right? Unlike many other decentralized exchanges. And if you want to give it a try, I'm going to leave the link in the description section down below. With all the scrutiny and legislative complications and governments pretty much making exchange data mandatory available for them, in my opinion, it's very important to have at least one decentralized exchange account. And in this case, the preferred one for me will be actually the D-Gate. On top of all, they have the super wide range of the cryptocurrency available for trading, hundreds. So there's no problem to find the meme coins or the newly launched coins. I mean, you see yourself. Moreover, due to the volumes, due to the critical mass of users that already use this platform, as I said, the sleepage is very low, and that's why I would really give it a try. And with all that said, guys, I wish you an amazing continuation of the week. I'd like to also give you more updates on alts and crypto. I want to see the significant sustained move. As I said, for now, the volume is not supporting my breakout Bitcoin thesis. So I'd like to see acceptance in the upper range, or we're going to have much better buying opportunities also when it comes to alts. So no rush here. I wish you an amazing week, as said, and we see each other on Friday. Much love and stay tuned.